Hi there, Miranda Alt here with Keller Williams Success Real Estate and the Miranda Alt team with your Monday market update for Monday, July 24th, 2023. Thanks so much for watching. It's a big week for housing. We've got all of our numbers coming in from June reports, and also we've got the Federal Reserve meeting this week. We'll talk about that in just a minute after we take a quick look at our McHenry County numbers for the last 7 days. For new listings, we had, sorry, my iPad went to sleep here. We had 145 new listings hit the market. We had 157 go under contract. We had 100 closed sales, 28 price changes, and 52 currently on the private network. So again, low inventory, we've got a high demand. We've got the housing market remaining very competitive. Some of the first numbers that we've got from June, the average number of offers per sales jumped to 3.5 in June from 3.3 in May. This is indicating that our housing market is heating up even as interest rates are holding at 7%. They've been pretty consistent about 7% for the 30-year fixed mortgage for a while now. Even as the feds have raised the prime rate, it hasn't affected mortgage rates in a sense that they've really been in the high sixes, low sevens since about January, but we are seeing more hikes coming in the future, and we'll talk about that again in just a moment. But it is still a very competitive housing market. You know, when I'm out and about, a lot of people are saying, I can't believe the housing market, it's so slow, there's nothing selling. And I'm like, oh, no, that is not the case at all. In fact, everything that is listed is selling very rapidly, as a matter of fact. There's just less to sell. So taking a look at some of the more numbers that we've got 33% of homes sold above their list price in June. These numbers are all according to the National Association of Realtors. The average days on market remained at 18, which is still a very low number. That might sound like a long time. You might say, oh, my neighbor's house went under contract in 2 days. Well, you've got to think 18 is the average days on market. So that's the good, the bad, and the ugly. Even the ugliest house on the block is going to sell in less than a month in most cases. We've got continued price appreciation, and according to Zillow, rents are still on the rise at 4.1% appreciation year over year. That's down slightly from last month where it was 4.8%. So we are seeing a little bit of a fix in the rents. That is largely due to the fact that builders are building a record number of apartment complexes, which will help rental prices come down. Now, why do we care about that? Because those rental prices are included in the shelter component of inflation reports. So improvement in rental prices will help us out in our inflation numbers overall and help the Fed stop with the rate hikes. Feds are meeting tomorrow with a decision to come on Wednesday about if they're raising the prime rate. They most likely are. They've already said that they will be. We know they're hiking another 25 basis points. Now, the big question is, will they do another hike in September? So we know they're going to, in August. So we know they're going to hike in July. We are anticipating they will likely hike again in August, but that might be the end of the hikes. We've got some economists say that inflation has peaked, even though it's still not at the Fed's target of 2%. If it has peaked, we might not see them feeling the need to continue to raise the prime rate. Some important facts to keep in mind are the median home price this is nationwide, is now $413,800. That's really high for people, especially with a 7% interest rate. It makes affordability very, very difficult. That's why we're seeing the need for more rentals. Many people are not able to buy a home anymore. Even people who might have started looking 2 years ago and weren't able to get something locked down. Well, they were pre-approved at 3%. Now they are going to get 7%. They're not going to be able to afford the same home that they were 2 years ago. It's making affordability very difficult. That median home price is now the second highest price ever after only June of 2022, according to the National Association of Realtors. Rental prices have risen 26% since February of 2020. So think about those people out there that have been renting. Why do we have so many first-time home buyers that want to get into the market? Well, a lot of that is because the rental prices have gone up. And these first-time home buyers, the millennials, we know that we have the largest birth rate of the millennial generation between 1989 and 1993. And all of those people are turning 30. That is the prime age to be buying your first home. All of those first-time home buyers are entering the market. They have good jobs. They have a large down payment. So those people are forcing sort of this influx of buyers into the market and creating even more competition for the houses that are on the market. Another problem we have, obviously, people locked in at a 4% or below mortgage rate. We know that over 70% of homeowners currently are locked in at 4% or below. So those people are feeling a little hesitation in wanting to leave their mortgage. Now, with all of this, why is the housing market still going? People are talking about, prices are higher than they've been in a long time. Rental prices are higher. It's just more expensive in general. Well, because the long and the short of it is that a home is still a good investment. if you find the right house, it's still a good time to buy. Every article that I read today from USA Today, from CoreLogic, all of them are saying that a home is still a good investment and that it's impossible to time the market. And the number one reason that people move is life change. They get married, they get divorced, they get a job change, they have babies, all of those things. That's why people move. So if you find the right house, even with a 7% interest rate, you are going to make money on that home. You live in that house for 15 years. I guarantee if you go back and ask anybody that bought their house in the 80s or the 90s with a 13% interest rate, are they glad they bought their home? Their answer is going to be yes. And a lot of those people have since paid off their home. They still live there and they love it and they're great. That's another reason why we see people not wanting to move. A lot of these baby boomers have lived in their houses for a long time. Their houses are paid off. They don't really want to move. They know that they're where they live, they like it, they don't really feel the need to downsize. I know a lot of people who are coming through the open houses that I hold, they're retirees that are saying, we don't really want to downsize. In fact, we want to upsize. We want a nicer home. We want to buy that dream home that we never bought when we were younger, and now we want that dream home. We can afford it and we want it. That's a lot of our buyers right now. They've got grandkids. They want a big home. They want a place where all their kids and their grandkids can come home for holidays. And we're seeing a trend in that direction, which is making people not necessarily, some of those baby boomers are not selling their home at all. They're staying in their home. And others are, instead of downsizing, they're actually upsizing. So we've got some interesting trends going on. Some other interesting facts that I found this week, about 1/3 of home buyers are paying over list price. Home sales declined 3% last month, and they're still, they're down. Now this is number of sales. This is not prices. The number of sales. So home sales declined 3% last month. Again, that's not prices. That's how many homes have actually gone under contract. That is, again, due to our lack of inventory. Home sales are down 18% from this time last year. Again, number of sales, not prices. Down 18%. So we simply have less people buying homes, less people putting their homes up for sale. There's just less homes being sold. We know in 2021, we sold 6.3 million homes. In 2022, we sold about 5.2 million homes. And this is all nationwide, according to the National Association of Realtors. And we're anticipating that in 2023, we're only going to sell about 4.2 million homes. So we're selling 1 million homes each year. So when people are saying, gosh, there's just nothing for sale, I mean, it's sort of true. There's far less for sale than we've had in years. However, there are still buyers out there and there are still homes to sell or homes to buy. If you need a home, if you really want to move, one client or one person that came through my open house last weekend said, yeah, they're building a gravel pit in my backyard. I'm moving. Yeah, that's a good reason to move. Another person, I bought a house on a golf course. They turned the golf course into homes. I don't want to live there anymore. Okay, so those people are moving. And if it's the right time to move, it's the right time to move. It is impossible to time the market. You're going to be happy that you bought a house if it's the right house. There's speculation that the feds could be done raising interest rates and that rates after September, we could see those interest rates come down. So the fourth quarter could be a very lively one in the real estate world, because if those interest rates come down below 7, if they get into the low 6s or the high 5s, man, it is going to be an extremely competitive market. So if you are thinking that you want to buy a home this year, you might want to get it under contract sooner than later and then just refinance when those interest rates do come down. I'm Miranda Alt with Keller Williams Success Real Estate and the Miranda Alt team. Thank you so much for watching. Enjoy the rest of your Monday. Have a great day. Bye.